Cakebox. And we're looking at their most recent results. Welcome, guys. It's Jake. Progress is everything. We're looking at Cakebox results. I'm not feeling 100%. I'm on antibiotics. Nevertheless, I thought it was really important to share this because I think the results are interesting. So what we got here. Audited results. Unaudited results for 30th of September, the last 6 months. Revenue growth against strong comparative period. Continued investment. The CEO has said, although revenue increased, trading the first half was against a very strong comparative period in the past year. I'm going to just jump into the figures here. You can see that revenue was actually up 2%. Gross profit was up 5%. EBITDA was down, and that's because of the investments they're making. We're going to look at that later on, so stay tuned. Net cash went up, which is good. In cash at the bank, it's basically stayed more or less stagnant, down 100K, but they've still got over 5 million in the bank. And their interim dividend has gone up. Earnings obviously have fallen because profits have fallen, but the dividend is up. You know, we're in one of the biggest potential recessions for many, many years, probably decades. And things look pretty good. Revenue's up. You know, cash in the bank is up. The dividend is up. They've had to spend a bit of money, but let's see what happens. Okay. So gross margins are also increased from 46% to 47%. Revenues are up. Margins are up. EBITDA and profit are less because of cost pressures and increased investment in the business. Balance sheet is up. As I mentioned, the interim dividend is up 5%. There's already about 6% dividend. So I guess, I don't know what it is now. More than 6%, which is still pretty good. The store count is going up 196 stores. I think that's actually more than 200 now, actually, I saw somewhere online. But anyway, 11 franchise stores were added in the period. Significant investment in production and distribution assets to improve efficiencies that will help with profits in the future. And what else? Like for like, slightly down a little bit, although franchise store sales were up 8%, which is very good. Kiosks, which is another thing they're looking at, and they're growing up nearly 10%, 34 million. Despite the lifting of lockdown, franchisees' online sales have maintained. So they've grown from nothing online sales through lockdown to 6.7, and now post-lockdown, it's still 6.7, which suggests people want to keep buying cakes online. The number of kiosks has gone to 33, with an increase in supermarket kiosks to 20. And in the first half, they only had 22. So they've gone from 22 to 33 in the 6-month period. And that, to me, is a big growth segment of the market. You know, there are a lot of supermarkets in the UK. They're only with one supermarket at the moment. And if you imagine they've got 33 kiosks just with one supermarket and they are growing within that segment, I wouldn't be surprised if in 2025 they have 100 or 200 kiosks. They could have more. You never know. That is a big growth segment for them. And just what that segment is it's actually just a kind of booth within a supermarket. You only need one employee, and it gets typically supplied by an existing store. So the capex is lower, the opex, the capital expenditure is lower, the operational expenditure is lower, but you get additional store count, visibility, customers, and there's an active customer base in a supermarket. Multi-site franchisees has grown to 43. This suggests that the franchisees are happy and they want to expand their store count as well. So trading has even improved. And in October, which is outside of this range, by the way, online sales are increasing 6.8% versus last year, which is great. So they actually say that the group's current trading is on track to achieve full market expectations in such a crappy market, in a recession, with the cost of living crisis, with inflation, with interest rates and mortgage rates going through the roof. Cakebox, on the other hand, is going to reach its market expectations, which were very high. 3 new stores have opened since the period ends, which takes the store count to 199. And they've got 44 deposits. I think it's over 200 actually. But anyway, 199 is what they're quoting. 44 deposits are held at the moment, and they're negotiating further supermarket kiosks. This is what I've just mentioned. So they're expanding. I wanted to look at this. Basically, they're saying that, under the tough consumer spending conditions, it's encouraging that their revenues have actually increased from 16.5 to 16.8 million. They're investing in growth. They've hired a COO and a marketing director, and they've bolstered production and food hygiene. They've made a significant investment in their Enfield, which is a North London bakery, by buying new state-of-the-art production equipment for cheesecakes, which is great because I don't think they do that much with cheesecakes. They do offer some, but if they can expand it, I do think, people love cheesecakes. I love cheesecake. I grew up my mom grew up in New York, so I do like a cheesecake. Anyway, this is reflected in this increase in admin costs from 3.9 to 5 million. So if you think about that, that if they hadn't have made those increases of about 2 million, their profit would have been the same as last year, more or less. It would have been much better than what it is. It would have been 4 million rather than 2 million. If we just scoot up to the top for a moment. So actually it would have been 4.8 million, which would have been an increase of 20%, but they're making these investments in the business. A bit like what Amazon used to do, investing in the business. The profit goes down a bit, but they continue to grow year on year. They're also looking at ways to improve the baking process to reduce waste and the cost of ingredients because they're going up. They've invested in van fleets, replacing older vans and adding more refrigerated vehicles. Guys, if anyone's interested in this, I have actually invested in a company called SunSwap, which indeed provides refrigerated vehicles to Cakebox. No, to supermarkets. But I wonder if they could provide them to Cakebox. I don't know. Anyway, planned van replacement last year was delayed because of unavailability of new vehicles in the market. So I wonder if SunSwap is looking at Cakebox. I don't know. Online sales and the new website. Well, here we go. Online sales were flat, but they're still good compared to the fact that COVID-19 and the lockdowns have finished. They're investing in digital advertising, which is what I do for Facebook and WhatsApp. I know digital advertising inside out. So anyway, they're now increasing online sales month on month from ads, which makes sense. I thought they should be doing digital advertising 3 years ago. Anyway, they expect this to accelerate with a new website. The new site will give the customer a better experience and increase conversion rate and loyalty. So it'll be data-driven with automation and bespoke marketing campaigns to increase CLV, customer lifetime value, which is like an e-commerce metric. But it looks like they could actually end up with a retail play and an e-tail play, traditional e-commerce. I'm really excited about that. Then franchisees, new stores, they're growing there as well. The dividend is up. The outlook is doing well, even October, which is after the reporting period. Like-for-like franchisee sales were up 4.6%, and total franchisee sales in the period to the 6 weeks to the 6th of November, we're now the 16th, were up 12.9%. So it looks like the future's bright. It's already starting, as you can see with October and November. I'm not going to go into everything else. I've already read this, and it's basically a reiteration of everything above. Earnings per share have fallen because profits fallen. But had they not spent 2 million on, improving the business, profit would have been higher, probably 10 or 20% higher. So the earnings per share might have been 8p or maybe even 9p. If we look at the share price right now, 118, right? It's on a PE ratio of 7. But, you know, I think that this half is going to be better than last half. So if we say that it's going to earn maybe 11p next 6 months, and let's say it would have earned 9p, that's 20p, and that's 6 times PE ratio. And for a company growing at like 13%, which is what they're basically saying, 12.8%, they've grown in the last 6 weeks. Having a PE of like 5 or 6 is ridiculous. And look at the dividend yield, it's 6.5%. You know what else they've said? Cbox have said that they're going to have a progressive dividend policy. What does that mean? It means the dividend is going to go up every year. Why are they going to do this? Number one, it is a cash generative business. Number two, the owners own a lot of shares and they want to pay themselves in a tax efficient way via dividends. When you have a bigger company, they still might want to increase dividends and whatnot, but the shareholder base is a lot more diversified. The owners own less of a percentage of the business. So what does that mean? I think for me, it means if we look at all the things, they're investing in the business, that's good. Profit would have been a much higher if they hadn't have made those investments. I would reckon 20p for the year. They're only valued at 119 at the moment, which is about 6x price to earnings ratio, which is fucking low for a growth company like Cakebox. You know, I wouldn't be surprised if in 2 or 3 years, those earnings per share have gone up to maybe 30p or 40p a year. Now, if you look at it from on a future basis and you're buying it for 120 a share, and in 3 years from now, it's 30 or 40p earnings per share. You know, you're getting this so unbelievably cheap. You know, it's kind of 2 or 3x. It's 3x basically that future earnings. And the dividend yield is nearly 7%. You know, when inflation comes down, this is going to look like such a strong company. Now, this is just my opinion, of course. You know, I'm not a financial advisor, but I do think this is a strong company that's basically suffered primarily from the economic outlook and the macro environment, the fact that people are scared about investing in stocks right now. But I think it's really interesting. You know, I do make other videos on this channel about angel investing and property and whatnot. But as you can see, you know, I do think there are opportunities within listed shares as well. Cakebox is a company I've followed for years. I've invested in them since the IPO. Ranges from around 220p to 400p. So I'm going to be probably pound cost averaging on the way up as well. Guys, I hope you like these videos. If you do, the best way to support the channel is to make it go Facebook blue and press the like button. Consider subscribing so you get up-to-date information about angel investing, equities, the economy, macro, etc. And I really hope you enjoy this. Remember, knowledge is power, progress is everything. I'll see you guys in the next video. Take care.